Welcome, everybody. We have a marvelous program for you today. My guest is Sandy Chaikin. And Sandy is co-founder and head of communications for Chaikin Analytics, a groundbreaking stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. She spotted the two best performing stocks of 2014 and bought and sold at the right time. Both stocks rose over 125% during that year, and her portfolio continues to thrive. Welcome, Sandy.
Yeah, thanks so much. I'm thrilled to be a part of your show.
Well, thank you. I have to tell you, I'm interviewing you about a subject I know nothing about because I never invested in anything but real estate. So I have a lot of questions for you today, and one of them is, how long have you been investing? You said in 2012 you started, but why did you start?
Well, 2008 really was a seminal moment when I had my 401k plan and retirement account managed by a professional, and the market, as we all know, took a huge tumble in 2008-09, and my account lost 40% of its value. So even though I had researched this and found what I thought was a reliable financial planner to manage my money, it didn't work out as planned. And unfortunately, I'm afraid a lot of people were in that same boat. So that was really a wake-up call to me that I needed to learn how to manage my own money and take responsibility for it, because my feeling is that nobody is more interested in the value of my money than I am.
That's for sure.
So that was, right?
Absolutely.
So
nobody cares more about your money than you do.
I say that all the time on every presentation I give. I say nobody cares more about your money than you do. So we all have to learn how to do this, and I found out the hard way. But at least that was the catalyst, and that gave me the confidence and the conviction that I just had to take control of this situation. So that's when I started investing in stocks.
Well, now you figured out a new way to invest, I understand. So tell us about that.
Well, after the 2009 meltdown, I took the money from my professional manager, put it into a Vanguard account, self-managed Vanguard account, and put it in the S&P 500 fund, because I didn't feel confident that I knew how to pick individual stocks. Interestingly enough, this whole experience of my losing 40% and having this wake-up call was the catalyst for starting Chaikin Analytics. And I say that because my husband, who's been a stock market expert for 40-some years on Wall Street, created tools all of his career for professionals so that they could make better decisions about what stocks to buy, what stocks to sell, when to buy, when to sell. And he was in retirement during the 2008 meltdown, but he saw my struggle. And he also saw, after the meltdown, the billions of dollars that left brokerage accounts, traditional brokerage accounts, and that money moved into self-managed accounts like Vanguard, like the account that I set up, where I was managing it myself. I didn't go through a professional, yet I didn't have the tools. I didn't have the tools or the know-how to know what to do. And so we said, look, let's take Mark's tools that he created for professionals, present them in a way that's understandable to an individual and a novice like me, and give those tools to individuals so that they too can now invest with the same confidence and the same reliable tools as the pros have. And that was how Chaikin Analytics got started, and that was in 2009.
Wow. So basically, you kind of learned along the way, and then what worked, you were able to then translate into something for people who invest with you. Is that correct?
That's pretty close, Gail. what happened is my husband created a model called the Chaikin Power Gauge Rating. It's a model that looks at the performance of a stock and gives a rating of whether that stock is likely to outperform or underperform the market. So it's basically a gauge, and the gauge goes from a very bullish rating to a very bearish rating. And it's very simplistic. It goes from green to yellow to red, and so it's very visual and intuitive. But underneath the hood is what I say is always a very complex algorithm, because this model is based on 20 factors. It's the 20 factors that institutions and the pros look at every day when they're evaluating a stock. And after extensive testing of 200 and some factors, Mark found these to be the 20 most reliable factors that can look at the potential performance of a stock. And so that's what he built into the model, and that's what is basically the centerpiece of the Chaikin Analytics research platform. So that is our most important indicator of evaluating a stock. Because if the power gauge is bullish or very bullish, that stock has a likelihood of outperforming the market. And it's all about outperforming the market, because if you're not going to outperform the S&P 500, you might as well just be in the S&P 500 and just put it in that fund and let it go. But if you want to outperform, which you can do with individual stocks, even in today's incredibly volatile and down market, there still are opportunities. And the power gauge rating is the guide. We say it's like a GPS for the stock. It tells you where that stock is headed. And it's been proven to be very reliable at doing just that. We've back-tested it, and every which way to Sunday. Nasdaq has asked us over 2 years ago to create indexes based on the power gauge rating. And we took 3 of their indexes, the large cap, the small cap, and the dividend achievers, overlaid the power gauge rating on those stocks that made up those indexes, weeded out the stocks that had a neutral or a bearish power gauge rating, so that the Chaikin Nasdaq indexes were left with only stocks that had bullish power gauge ratings. And in the first year of performance, those Chaikin indexes outperformed their benchmarks by anywhere from 49 to 72%. So, that's really the proof of the pudding that this is.
That's fabulous. That's great.
Yeah, exactly. I mean, if it's good enough for Nasdaq to create indexes based on it, it's good enough for me.
So what do you do about something that you can predict, like what's happened with Volkswagen in the last week? I mean, the stock plummeted, and somebody wrote a memo to me today that said, they're blaming Volkswagen, but they shouldn't blame Volkswagen. That's a non-entity. Blame the leaders at Volkswagen, because Volkswagen as a inanimate object didn't do it. It's the people, it's the leadership there. So what do you do in a situation like that where you can't really predict that something like that is coming down the pike?
There are going to be instances like that. Any investment in the stock market involves risk. What we try to do is minimize the risk. And we found that in 70 to 75% of the time, we can minimize risk. To answer your specific question about Volkswagen, if that rating was not already bearish, and there really was nothing in that in the recent problem would have triggered a bearish read, because it was unknown. If their earnings were poor, if their earnings estimates were poor, if their cash flow was poor, then that might have attributed to a bearish rating. But just solely on what we didn't know. I say you don't know what you don't know, and the model wouldn't have known that either.
No, exactly. It came out of the blue, But,
it came out of the blue. Yeah, exactly. So there are going to be times like that when they come and it comes back to kick you, but you can't.
Well, that happens in every industry, So I
What we do have, though, Gail, to address that is we have a component of the gauge. 5 of the factors are bundled into a component we call expert opinions. And this is the closest thing you could get to something like a Volkswagen, because this shows what the insider activity is, and it shows whether insiders are buying or not. And this could be a tip-off. For instance, if the insider activity at Volkswagen was bearish, that to me would be enough of a factor. That's one of the 3 of the 20 factors that I look at on an individual stock before I buy it, because I want insiders to be buying a stock. The only reason insiders would be buying a stock is if they thought that stock was going to go up. There's a lot of different reasons an insider might sell. For instance, a down payment on a house, a college tuition. But they only buy for one reason, and that's because they think the stock is going to go up. So a stock that has a poor or a bearish insider activity rating is not one that I want to buy. It's one of the 20 factors, but there are 3 of those factors, including insider activity, that are the 3 that I feel are the most important. And that's what I check before I buy a stock.
Well, now, how did you get involved with Nasdaq? I mean, tell us about your partnership with them.
The partnership evolved initially from this request of theirs to create indexes based on the power gauge rating. And so we created those 3 indexes. They were launched in April of 2014. And so the 1-year review kind of came up in April of this year, and that's when the performance shows that the indexes, which weren't changed, the stocks stayed the same on April of 2014 as they are on April of 2015. Nothing changed, and during that year, as I said, the Nasdaq Chaikin indexes outperformed their benchmarks by anywhere from 49 to 72%, and they're still outperforming. So with that said, I worked with the Nasdaq marketing head, Jennifer Simmons, to form a collaboration where we educate their community. So they have a community of some 50,000 users who are on a mailing list of theirs, for instance. And they mail to them invitations of webinars. We set up a webinar series called From Novice to Knowledgeable. And we set up a series of webinars about every 6 weeks apart, where I would present to their audience, their online audience, a different topic based on, with the theme of, you can be a novice investor and learn to be knowledgeable, or you can have any type of experience level in between. But it was basically to teach people and give them confidence on how to invest in stocks and how to pick winning stocks. And so that's what we've been doing, been working with Nasdaq. They promote it to their audience through their mailing list and through their website. And I just gave one about 10 days ago on the topic of the 5 biggest mistakes that investors make and how to avoid making those mistakes.
Well, that's
So
great, because
yeah,
I can see. I mean, it's a wonderful, wonderful partnership. I mean, it's something I think you should be very proud of to have achieved, because not everybody gets that kind of opportunity.
That's true. No, that's true. So yes, it has been terrific, and we look for that on an ongoing basis. But I in particular have been focused on educating women.
Well, I was going to say that you're targeting women because you want them to invest more. And why is it so important to get more women investing?
Well, it's really interesting. I've done a lot of research on this, and the research shows that 72% of all women don't feel confident investing in the stock market, and that's a huge number. But that number has been researched and comes to me via Fidelity, and also LPL has done their own studies, Lincoln Financial, and they found a similar finding. Women just don't have the confidence to invest in